Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Pavitra Parekh. It's 1:30 p.m. and we have a lot to track. Let's start the show with the top headlines. Broader markets relatively outperformed larger peers as stocks trade ranged after a soft open. Advances outstripped declines by a good margin. Healthcare and pharma lead gains while realty and private banks drag.
Sugar stocks such as Dhampur Sugar, Sri Renuka and Balrampur Chini gain between 5 to 6% after the government reverses its decision to ban the use of sugar juice to make ethanol, limits diversion to 17 lakh tons.
Landmark rallies over 6% receives approval from Mercedes-Benz India to open a workshop at Hyderabad, while it will also be opening an MG motor dealership in Gujarat.
And PVR Inox gains on the back of multiple block deals after Plenty Private Group along with multiple private equity funds sell stake. The stock is up nearly 2%.
Okay, all right. Those are the top headlines for the markets. It's a quiet day after the stellar rally that we saw in the last week. So the Nifty is down around 30 odd points. It has come off from the highs actually as well, around 70 points from there. But what is really doing well is the mid-cap index. That one is up in a weak market, 143 points higher. And you know, Pavitra, I was just mapping the performance in this year. Year to date, Nifty is up 18.5%. The mid-cap index is up 45.2%. And the Nifty small cap index is up around 54%. So no prices for guessing how we've seen that in the flows as well. But if we look at the 5-year and 10-year annualized returns for these three indices, 5-year annualized, Nifty is up around 14.4%, Nifty mid-cap is up 20.9%, and we have the Nifty small cap, which is up around 18.7%. And 5-year annualized earnings, they have crossed the 10-year annualized returns as well. That was not the case 2 to 3 months back. 10-year annualized returns were still higher than the 5-year annualized returns, but after the stellar move that we've seen in last 1 week, Nifty scaling the 22,400 mark and the moves in the mid-cap and small-cap index, there has been a big up move. And now 5-year returns for mid-caps and small-caps, it has actually surpassed the 10-year returns as well. Just tells you how much of the returns or the flows are going into these segments.
Oh, absolutely. Very interesting data. And also the appetite is still so high, right? You're seeing so many of these mid-cap kind of IPOs hit the street and just being completely absorbed. Even today from the lows of the day, right now, yes, the mid-cap index is up 130 points. But from the lows of the day, it's seen a 400-point kind of rally, right? And it, was at that lower level for a very brief period. And after that, it's held at these higher levels. So very interesting moves over there. Today, of course, there's a lot of action. If you take a look at the at the key indices, there's a lot of action in the pharma space, which stands out after a while, because that's been one space which has not really participated in this rally much. And you also have the auto stocks which are gaining some more. So big moves seen in that entire pack. But let's get in a technical check now. We have Ashish Kyal joining us from Wave Strategy to really take us through that. Ashish, today, while it is around a 35-point downtick, we have seen quite a recovery from the lows. And this is in spite of the fact that we've already seen such a strong rally. How do you see the next couple of days panning out?
Hi, afternoon to you and all the viewers. If you look at Nifty over the past 6 to 7 weeks, it has managed to protect its prior weekly low. And for 7 weeks consecutive, it is one of our strongest rally that we can see from 19,000 levels and now at around 21,420. If we look at the open interest data, there is some build-up at 21,500 by the call sellers. And it looks like we can consolidate in a range between 21,380 to 21,490. That's the range as of now. But the overall tone of the market remains on the buy side. The call sellers have been punished brutally in this entire uptrend, and it's best to be using any kind of a dip towards 21,380 as a buying opportunity, expecting a trend back to that 21,500 mark. And if the same is crossed, then we will start seeing another set of up move, possibly towards 21,683, which remains to be the gain level.
Okay, so that is the levels in the Nifty. What about individual bets?
The first pick is going to be on from the IT space Quest Corp. We can clearly see a very strong up move in today's session. The stock is looking like starting the third wave on the upside, which is going to be strong and fast. We can expect the stock to move towards the level of around 555 on the upside over short term, and one can maintain a stop loss of 499. And the next stock on the buy side is going to be Sham Metallic. Again, we can see that it was forming a good triangle kind of a pattern, gave a breakout, and now it is ready to move up again. The volumes are picking up in this stock, and we can expect a target on Sham Metallics to the level of 575. One can maintain a stop loss of 515.
All right, those are some interesting picks in this market. Ashish, thanks.